Money is the commonly accepted medium of exchange. In an economy which consists of only one individual, there cannot be any exchange of commodities, and hence there is no role for money. What is barter exchange? When economic exchanges occur without the mediation of money. Consider, for example, an individual who has a surplus of rice, which she wishes to exchange for clothing. If she is not lucky enough, she may not be able to find another person who has the diametrically opposite demand for rice, with a surplus of clothing to offer in exchange. Barter exchanges become extremely difficult in a large economy because of the high costs people would have to incur looking for suitable persons to exchange their surpluses. Risk on the barter system. A barter system has other deficiencies. It is difficult to carry forward one's wealth under the barter system. Suppose you have an endowment of rice which you do not wish to consume today entirely. You may regard this stock of surplus rice as an asset which you may wish to consume, or even sell off for acquiring other commodities at some future date. Functions of money. 1. Acts as a medium of exchange. 2. Acts as a convenient unit of account. 3. Acts as a store of value for individuals. On a cashless society, what is it all about? Some countries have made an attempt to move towards an economy which uses less of cash and more of digital transactions. A cashless society describes an economic state whereby financial transactions are not connected with money in the form of physical banknotes or coins, but rather through the transfer of digital information between the transacting parties. Demand for money and supply of money. The demand for money tells us what makes people desire a certain amount of money. In a modern economy, money comprises cash and bank deposits. Let's differentiate the central bank versus commercial banks. The central bank is a very important institution in a modern economy. Almost every country has one central bank. The central bank has several important functions. 1. It issues the currency of the country. 2. It controls the money supply of the country through various methods, like bank rate, open market operations, and variations in reserve ratios. Commercial banks are the other type of institutions which are a part of the money-creating system of the economy with functions. They accept deposits from the public and lend out part of these funds to those who want to borrow. Understanding the process of deposit and loan or credit by banks. Commercial banks mediate between individuals or firms with excess funds and lend to those who need funds. People with excess funds can keep their funds in the form of deposits. A bank must therefore balance its lending activities so as to ensure that sufficient funds are available to repay any depositor on demand. The accounting rule states, both sides of the account must balance. Hence, if assets are greater than liabilities, they are recorded on the right-hand side as net worth. The formula is net worth equals assets minus liabilities.